Why did Donald Trump oppose the tariffs? With more time, there is more clarity, and now it is quite clear what actually happened during that time. As you all know, the stock market was going down, and as well the bonds was going down. This is very, very unusual. This is extremely unusual. This is something that almost never happens. So today we will be discussing why the particular bonds were going down. But before we start, I just wanna introduce myself. My name is Joe, and I talk about geopolitics and macroeconomics. So first we have to understand that there is a huge myth. There is a huge myth that the Chinese government there has also been myth that the Japanese government has been dumping the bonds, but most likely that is just not true. None of these governments have been dumping bonds, and even their central banks have not been dumping these bonds. What actually happened most likely is that what spiked upwards was the 10-year treasury and the 20-year and 30-year. These type of long-term bonds, they are usually held by private investors, not state-owned banks like a central bank or stuff like that. These are usually, the longer-term bonds are usually held by private investors, like bond hedge funds, bond-oriented hedge funds, or privately owned banks, commercial banks. And so what most likely happened is that in Japan there is very low interest rate, and so basically this was revealed during the small little crisis in June 2024, where a lot of American hedge funds were over-levered by basically taking loans in Japanese currency and then buying United States stocks. Something similar most likely happened during the tariffs, during the worst time that the tariffs had. Basically when they were announced during that week, something similar happened. But in Japanese style sort of way. Basically, instead of American hedge funds, this time this were Japanese privately owned hedge funds who were basically highly leveraged, because if you borrow in Japanese currency, you have the huge advantage that you don't have to pay as much interest rate. And so when you borrow in Japanese currency and then buy, for example, bonds that are in United States currency, in dollars, you have a huge advantage. You have basically free arbitrage money. And what these hedge funds most likely were both holding bonds and stocks as well. Most of Japanese hedge funds are not invested in Japan. That is because Japanese stock market is viewed as very, very not worth investing into, because basically you have to understand there hasn't been much growth, and so nobody wants to invest in Japan, and therefore most of these Japanese hedge funds are actually invested in United States stock markets. And as the stock market was falling down, because these Japanese hedge funds are they have a huge leverage, they had to start liquidating some of their positions. They were just basically squeezed out. They were squeezed out of the market. Similarly, like for example, what was the GameStop saga? The GameStop, when the hedge funds were squeezed out. Similarly, but these hedge funds were long. These Japanese hedge funds were basically squeezed out. And not only were they squeezed out of the stock market, they also were holding bonds, and they needed to liquidate some of their positions even in the bond market. Now, this is crucial. This is important to understand. bond market is not 100% liquid. This is you have to understand this, but bond market is not 100% liquid. I will use the example of real estate. For example, if you have real estate that is worth $70 million, that real estate cannot be sold the next day, because there is not that many buyers who are willing to pay $70 million. And so this type of property is not 100% liquid. You have to wait and see who will actually buy this type of property. It's not your everyday buyer. And so usually on the very high luxury real estate, we say that it's it's basically illiquid. And similarly to bonds, the United States bonds, if you are, for example, holding a 10-year bond and you have been holding it for 7 years, basically nobody's going to buy it, you know. It's also with the old interest rate, so before the pandemic, so it's with the very low old interest rate, and so nobody's going to buy this 7-year-old 10-year. And nobody's going to buy this 7-year-old 20-year, and nobody's going to buy this 7-year-old 30-year. No one wants that, basically. And so what happened is that these Japanese hedge funds, they had to dump some of their stock positions, but they also have to dump some of their bond position, and they have to basically start dumping the very, very new, the bonds that were issued basically week ago, or very, very new bonds that they have bought recently. They had to start dumping those first, and that's what caused the bond market to just all of a sudden go down so much, and especially in those long-term hold bonds. Those are usually held, as we said in the beginning of this video, those are held by private investors. Usually the 2-year and less time, those are usually held by governments. So no, China has not been dumping these bonds, and no, Japan has not been dumping these bonds either. It has been private investors who have been over-levered. It has been private hedge funds, private Japanese hedge funds that were basically greedy. They were borrowing a lot of money and they were over-levered, and they got squeezed out. One thing that is important to mention, we have to talk about this because this is actually happening right now as we speak. This is a new situation that developed since then. Since the week of the announcement of the tariffs that were put in place. What happened is that obviously the stock market crashed a little bit. I mean, it was a tiny bit downwards movement, and then they were paused, the tariffs. And they were paused because simultaneously the bond market crashed, which we explained why it happened. It was because of the privately owned Japanese hedge funds. Now you have to understand what is happening now. What is happening now? What's happening since then is that China and Japan has actually started selling their bonds, or at least the short-term bonds, basically the 2-year and shorter, 1 year or even 6 months. They hold these very short-term bonds that have very, very low interest rate, but it's actually better than just being in dollars. So instead of just holding dollars, they will buy these very, very short-term bonds. And since this happened, since these tariffs were paused, everybody started to put themselves into the regime of recession. Everybody's basically hedging for the recession, like very heavily. And what the Chinese and Japanese are doing, they are not necessarily selling bonds, but what they are doing is they are not buying new ones. They stopped basically buying new ones, and they are just holding the dollars as it is. They are holding the dollars. And instead of who has started buying these bonds, even the shorter terms like 2-year, were private investors. So the demand, well, it's not zero, but the demand has lowered from states like China, Japan, but also from other states. The demand for these short-term bonds and even some of the longer ones has went down. It went down, so they are not buying as much. But who is buying a lot are the private investors, private hedge funds, and just Main Street buying bonds right now. That is because right now the bonds are having pretty much around I was checking it last time, they were around 4.5% on the 10-year and 20-year and 30-year. Those were around that percentage. And what is advantages? What is the huge advantage about 10-year, 20-year and 30-year is that most likely, if there is real recession, if there is true recession, what will happen is that Fed will cut interest rates. Now, you have seen a lot of posturing from Jerome Powell, or I believe that's his name, if I'm not mistaken. I hope I pronounced it correctly. But from the Fed chairman, from the president of the Fed, or however you call it. We have seen a lot of strong posturing, basically signaling that they will not rescue the stock market and then they won't cut interest rates. But obviously that's not going to happen. You know, this is all just posturing. A lot of politicians do this. They posture a lot. Even bureaucrats who are in political positions, like Jeremy Powell is Fed of the chairman is basically a political position, and he is doing a lot of posturing and signaling that he won't cut interest rates anytime soon. But if a real recession starts, and you have to understand this is not 100%, but if real recession comes, he will have to stimulate the economy somehow, because there is going to be a strong deflation, and he will have to stimulate the economy somehow. And so the best option that the Fed has is to lower interest rates. And everybody, you have to understand, this ties back. Therefore, everybody already expects this. Everybody already expects rate cuts, because the recession is most likely coming. And so everybody is right now, at least the privately owned hedge funds and mainstream and everything in between. All of these private institutions, they are all buying bonds right now because they are expecting that their interest rates will be cut. And so they are trying to secure right now these bonds because they are still with high interest rates. So why does the government like China and Japan, why don't they do the same? Why is it that they are not buying, but actually they are pausing and only securing smaller amounts of bonds as there were before this all happened? Well, it has to do everything with exports and imports, because there is less exports and imports from the United States. It's obvious because there are these huge tariffs. China needs still dollars in order to basically exchange goods between other countries. Dollars are the number one currency. They are the number one reserve currency, and so they are not buying any more bonds because they are holding real dollars. They cannot afford to lack dollars right now. They need it for exchange of other goods, not just with the United States, but with other countries. And they are afraid that they may not have enough dollars to exchange other goods in. And so they are not going to buy bonds, even the shorter ones, at least not as many, because they are afraid that they would run out of dollars. And that is the same for every other country in the world. There's basically a dollar shortage between countries. That is because there is not as much import into the United States. And if you create goods and then import it in the United States, you get dollars back. But right now you cannot do that because of these tariffs. So at least on paper, everybody's afraid that these tariffs, we can already see the big slowdown in imports into the United States. And so everybody is afraid that there is at least the states are afraid that they will have shortage of dollars. in their banks, and so they are not buying any new bonds. Guys, I really hope that you took away something from this video. It has been actually a little bit harder for me to do it in this video format. I would much rather prefer just to write it on my blog, which I'm trying to do as well right now. I have been trying to write about these tariffs for a little bit now, and I still have a hard time completing this article. But if you have hard time following what I have been saying in this video, there is going to be very soon a blog article which will describe this very easily and very in a simple way. How does this relationship with the dollars, how is it connected to import and export? What is the number one global reserve currency? It's right now dollars, and why is it? And everything in between, and also the bonds and how countries buy these bonds and why they are buying them and everything, and even more hopefully will be in that article. So make sure to check that one out, and also make sure to smash that like button, make sure to smash that subscribe button, make sure to check out all of these videos here, there and everywhere, and as always, guys, I will see you in the next one. Bye bye.